It's a pretty wild idea when you stop and think about it. How does a simple 9-digit number, one that the IRS created just for collecting taxes, somehow become the key to buying a house? It's one of the biggest financial decisions anyone can make. Well, today we're going to unpack the ITIN mortgage market. It's this fascinating kind of hidden financial system that's been built entirely in the shadow of traditional banking. All right, so here's the game plan for this explainer. First, we're going to look at that 9-digit key itself. Then we'll get into the single biggest factor that shapes this entire market. And trust me, it's a big one. After that, we'll go inside the nuts and bolts of an ITIN loan. We'll even look at some of the pioneers who are making this all work, check out the hurdles they're up against, and then wrap it all up by asking, what does this market on the margins really tell us about the bigger financial picture?
Okay, let's kick things off with the tool that's at the absolute center of this whole story, the ITIN. Now, on the surface, it looks like it's just a tax number. But in the real world, it's become, well, a whole lot more. And really, it all boils down to this fundamental question, right? How in the world do you buy a home if you don't have a social security number? For millions of people, that traditional path to owning a home, it's just blocked. The door is closed, all because they don't have that one number. So what's the workaround? How do they do it? Well, the answer is this thing called the Individual Taxpayer Identification Number, or ITIN for short. And you have to understand its official purpose because it's absolutely key here. The IRS couldn't be more clear about this. It is strictly a tax processing number. That's it. It was created back in '96 for one reason and one reason only: to let the government process tax returns from folks who can't get a social security number. End of story.
And the differences between an ITN and an SSN are just massive. An ITN, it gives you 0 work authorization, and if you don't use it on a tax return for 3 years, poof, it expires. An SSN, on the other hand, is for life. It's your key to work authorization. This difference is everything, because it tells you the ITN was never ever meant to be a tool for getting a loan.
Okay, so that brings us to the single biggest, most important economic reality of ITIN lending. Seriously, there is one structural problem that defines this entire market from top to bottom.
And that problem? It's all about Fannie Mae and Freddie Mac. Look, these are the two giants that buy up almost all the mortgages from banks. They're like the giant wholesalers of the mortgage world. But here's the catch. They will not touch an ITIN loan. Not a chance. And if they won't buy them, the bank that made the loan in the first place, well, they're stuck with it.
So what happens? The bank is forced to hold what's called a portfolio loan. That means they make the loan, and then it just sits on their books for the entire 15 or 30-year term. They have to carry 100% of that risk themselves. If the borrower defaults, the bank eats the entire loss. That right there is the central challenge of this whole business. And this quote from our source material really just nails it. It's not just some small logistical headache, right? It's a massive disincentive. It creates this incredibly high-risk environment that, frankly, scares off most of the big lenders. And that's exactly why this entire market is forced to operate on the fringes.
So if it's so risky, how do the banks that do offer these loans actually manage them? I mean, how do they make it work? Well, they've had to get incredibly creative. They've been forced to innovate. So let's take a look inside the really unique underwriting process they've had to build from the ground up.
And let me tell you, this process is not easy. Not at all. We're talking 3 times as long to process an ITIN mortgage compared to a regular one. And the reason is pretty simple, really. You can't just click a button, pull a standard credit report, and get a FICO score. That whole system doesn't exist for these borrowers. So what do? Lenders literally have to build a complete financial picture from scratch. They're looking at alternative data, stuff like proof of timely rent and utility payments to show someone is creditworthy. They're analyzing the entire household's income, not just 1 or 2 people. And of course, they have to do some really intense verification of identities and documents. It's all manual, old-school, labor-intensive work.
Okay, I know this all sounds a little bit abstract, so let's make it real. Let's look at an actual, real-world example of a bank that absolutely mastered this process and built this incredible toolkit just to manage all that risk.
So let me introduce you to Second Federal Savings in Chicago. They're located in a neighborhood called Little Village, which is largely Latino. And these guys, they didn't just dip their toes in the water. No, they went all in. They became aggressive pioneers in the ITIN mortgage game.
And the results? Honestly, they were staggering. Get this, just 5 years after they started the program, they'd built up a portfolio of 780 ITIN loans worth about $90 million. $90 million! That just proves that they've figured out the secret sauce. They found a way to make this high-risk, super hands-on model actually work at a pretty big scale. And their toolkit for doing this is just fascinating. It wasn't just about approving the loan, it was about managing the risk every single month. For starters, they made borrowers open a deposit account right there with them. Why? So they could automatically sweep the account for the mortgage payment, no forgotten checks. Then, they had a 0-day grace period. You're 1 day late, the collections process starts immediately. And on top of that, they partnered with nonprofits to provide mandatory training for all their borrowers. It's an incredibly hands-on, super disciplined system.
But, the challenges don't just stop with the banking system. The very first step, just getting and holding onto an ITIN, the key that starts this whole engine, is loaded with its own bureaucratic nightmares, coming directly from the IRS itself.
Just take a look at this. This data shows you the rejection rates for ITIN applications depending on how you submit them. If you try to just mail it in yourself, your chances of getting rejected are way higher. But if you use what's called a certifying acceptance agent, basically a trusted partner that the IRS authorizes to check your documents, the rejection rate just plummets. This proves that the process itself is so complicated that it's a huge barrier for people.
And we are not talking about a small problem here. Since just 2022, the IRS has rejected over 500,000 applications, 500,000. That is a massive number of people hitting a brick wall before they can even get started with the tax system, let alone the financial system. And then there's this statistic, which is just wow. In 2023 alone, the IRS actually destroyed almost 8,000 taxpayer documents. And we're talking about things like original passports. Why? Because they lost contact with the applicant. It just makes all that bureaucratic friction feel so real, and it shows you the huge risks people are taking just to try and apply.
All right, so let's put all these pieces together. You've got this makeshift key, this huge hole in the secondary market, all this creative but difficult underwriting, and then these massive bureaucratic hurdles. What does this whole ecosystem actually tell us? It's time to pull back and do the final analysis.
Okay, here's the core idea, the big takeaway. The ITIN lending market is a powerful, real-world case study of financial innovation that's born from pure necessity. It's what happens when the formal mainstream system leaves a huge group of people behind. A new system just emerges in the shadows to fill that void.
When you look at this ecosystem, it reveals 3 really important things. First, the fact that it even exists, despite how hard and risky it is, proves there is an enormous unmet demand for credit out there. Second, it shines a huge spotlight on the systemic barriers that push all that demand to the fringes. And finally, it shows that real, on-the-ground innovation, it often doesn't come from the giant banks. It comes from these smaller, community-focused banks that are willing to roll up their sleeves and do the hard work.
And all of this leaves us with one last big question to think about. The ITIN mortgage is one incredible workaround, right? But what other financial workarounds are out there operating just on the edge of the formal system? And maybe more importantly, what does their very existence tell us about who our economy is leaving behind to fend for themselves?